I went ahead and used a economic model called the quantity theory of money, known as QTM, in order to try to give an intrinsic value of XRP. So if you don't know what QTM is, it's right here, and it's mainly used in like monetary theory. The kind of economists that really adhere to this are called monetarists. And really, what it's saying is that the size of the supply of money is proportional to the price. So, for example, if this was in the context of talking about monetary policy, if the money supply goes up, M represents the money supply, V is velocity. Over here, velocity is just the amount of times a unit of money changes hands within a given time frame. So these are multiplied by each other, by the way. So like the money times the amount of times each unit exchanges hands is going to essentially increase the available supply. So it's, if you're looking at each side of this, the left side is essentially the supply side, and the right side is essentially quantifying demand. So it's supply demand, right? So, if you're looking at the left side for government, for example, you're saying that, money's going up, and because of, everyone having more money, there's going to be higher demand for goods and services, and if the goods and services can't keep pace with that increased demand, they're going to increase the prices, which is the P side here. Okay, so that's specifically like the interpretation, the monetary theory behind this. Now, when used for crypto, because a lot of times people will use this for crypto, to value crypto, for example. So, for something like XRP, which is utility driven, we have the circulating supply, which is M right here. The circulating supply number, I went ahead and got this data, so this is accurate. Circulating supply of XRP is right here. And then you have V, which is the velocity. Went ahead and calculate this as well. You can just manipulate the equation to find velocity. So if you move this around, velocity equals price times transaction divided by the supply. Okay, so how many times each unit of XRP exchanges hands within a given time frame. And for us, the time frame that we're using is 1 year for this. Okay, and we were calculating 1 year based on starting before the pump in XRP. So it's essentially this data down here is essentially what we're looking at to calculate this. So we're trying to say, like, if we were in this zone, what would the intrinsic price of XRP be, assuming that we didn't know, this pump, because we don't want to have this outlier skew things up, right? Okay, so average weighted price of XRP, that's what the P is in the equation. I use this going all the way back to 2020. So I'm just taking the last bull run, because I wanted to take more relevant data than just using this sideways action right here. I wanted to have a whole bull run, a whole bear market in it as well. So we're getting an average weighted price, and to calculate that, we just have open, high, low, close. We're calculating the average of those for the average daily price, and then the weighted contribution for the day is the average price for the day times the XRP daily volume. The data only had volume in USD, so XRP daily volume is the volume in USD divided by the average price, and that gives us the volume in XRP. So then the weighted contribution is the average price divided by the XRP daily volume for that day, and that gives us essentially the economic utility for that price. So higher prices are weighted heavier, lower prices are weighted lower, etc. In summing this up, so we took the sum of weighted contributions, which is all this going back to 2020, and then we have sum of total volume, again starting from before the pump happened, which is this day right here, November 10th. It gives us an average weighted price of 60 cents. Essentially looking at, the data that's highlighted green, average weighted price of 60 cents, okay? Now, the transaction volume, which is essentially, it's what it sounds like, it is the volume within this period as well, which is essentially the economic utility, because within this, we have 60% of, I believe it was 60% of ODL clients that XRP had used XRP, something like that. But regardless, whatever clients XRP has, whatever clients that Ripple has that use XRP is going to show up in this, right? Along with speculative demand by institutions and retail, okay? So in looking at this, right, which this was, XRP daily volume, right? How many XRPs are really, moving each day? And then, from November 2023 to November 2024, so this is actually only about a year, okay? We have this number right here. And when we calculated that, okay, and specifically when we calculated it, it was November 10th, but, we're using this, November 10th, actually, if you look at it, it's 62 cents. The average rated price is 60 cents, so assuming we calculated it on November 10th before this pump happened, we got an intrinsic value of XRP of $1. okay, which is like essentially $1 is essentially this green line right here, this bottom green line, which was, 40 cents higher than 40 cents higher than the current price that XRP was at. So we would expect with these variables, right, XRP should be trading around $1. Now, assuming that the volume increases during the next bull market at 400%, right, which the last bull market, it actually increased, I believe volume increased on average by 280%, and that was when XRP was not listed on really any major exchanges. It wasn't listed on Coinbase. It wasn't listed on Binance, BitTrue. It wasn't listed on Robinhood. All these major exchanges did not have XRP, and it also had the SEC thing at its highest, right? The SEC lawsuit, at its highest. And still, what happened, guys? Still, what happened is that it rallied by 800%. It's still what happened. Okay, so now it was a huge laggard, but it went up 800% with all that happening. Now, this time, I think part of the reason why we're seeing this pump so early on in this cycle, and it's already gone up 200% in a few weeks, is that if you look at down here, it was November, before the pump actually happened, November 13th. If you look on the daily, November 13th is right here, okay? So we haven't actually gotten out of this range yet on November 13th. We're still within, we haven't broke resistance. This is when XRP was relisted on Robinhood. And guys, Robinhood has millions upon millions and millions and millions of traders. Okay, so the kind of demand, from that alone, I mean, you have increased demand, but look at this, right? Everyone, obviously volume is going up because the whole market pumped, but this time XRP is participating. This time, it's a different market environment at the core, in my opinion. And I think anyone can really see that. It doesn't just have to be my opinion. Okay, so knowing that we have, all these new exchanges that XRP is on, the regulatory environment is changing under Trump. Gary Gensler has stepped down, is stepping down in January. We're probably going to have someone that's crypto-friendly as the head of the SEC. We're looking at things like the U.S. government having a national Bitcoin reserve. Other governments may fall in line after that, probably will fall in line as the U.S. leads the way in that. MicroStrategy coming out with its announcement of purchasing, I believe it's 1 million Bitcoin over the next few years. These are major demand drivers, and if you know, economic theory, if you went to university, you understand what drives price is supply and demand, and really, that's what this is here, is we're quantifying price by looking at supply, which is MV, right, and then demand, which is the PT. Now, MV, each one of these is going to be a shift on the supply curve. P is a movement along the supply, on the demand curve, sorry, but T, which is essentially the demand, the transactions, right, the volume of transactions, that's going to be a shift of the demand curve as well. So, in looking at the transactions that were calculated, if we're saying, because of these new exchanges where we have so much access to more traders, to more demand, we're assuming instead of a 280% increase in an average volume during the bull cycle, we're going to have a 400% increase. And I don't think that's unreasonable at all. I think it could be a lot higher than that. But I'm saying going from 280 when all this was going on to back here, which was holding it down, going to 400 in this new environment, this new market, okay? I think that's completely reasonable. So with a 400% increase, which is 5x from here, when we plug that into the calculation, guys, and then we manipulate it to get price, so the intrinsic price, the intrinsic value. So if you manipulate this equation here, you have P is equal to T divided by M multiplied by V. And when you do that, you plug these numbers in, you may be looking at this and say, well, why isn't it MV over T? And that's just because if it's MV over T and you increase T, which is the demand, the price actually goes down, and that works in the monetary theory way when you're looking at countries, but when you're looking at crypto, it's actually different because increased demand is actually going to raise the price of the cryptocurrency. So that's why we have T in the numerator, because when transactions go up, that's demand going up. It's going to increase the price of the asset. Okay, so assuming a 400% increase in transactions, we have an intrinsic value of XRP at $5. And whenever the cycle pops off, that's what I'm saying, quantitatively, we're not speculating here. Okay, this is using a model to value the price of XRP quantitatively based on very reasonable assumptions of going into this bull market, a 400% increase in volume. Now, we were calculating the prior year, and if you look at the prior year, volume is essentially as low as it's ever been in XRP. Okay, I mean, look at this volume. This is basically what we were calculating. So it's not that hard to assume this is going to go up 400%. Okay, I mean, even if you're looking at already what's happened here, this is essentially already 3 to 4x on some of this averages right here, the volume that we've already seen going back to August of 2023, for example. Okay, so which is over a year. And look what we've already seen, a 200% increase, right? And I really do think, guys, that when this starts popping off, when the actual retail flood starts coming in, and we're in a bull market, and then, it's at the point, well, the end of the bull market is essentially when your grandparents start talking to you about Bitcoin. It's like, wait, why are my grandparents talking to me about Bitcoin? That's when you know it's over at that point, by the way. You know the bull market's over at that point. When people that never should have known about something like crypto are talking about it, you know it's over, because it's gotten to literally everyone, and the only place it can go at that point is down. So $5, this is the intrinsic value. Now, I have 7.5, 15, and 25 as multipliers from the intrinsic value. Now, looking at really any industry, they're going to have, if you've heard things like price to earnings, right? So the price of the stock relative to the earnings of the actual company, right? And you traded a multiple of that. So like in certain industries, really any industry, like in equities, has a price to earnings ratio where what's considered normal. Okay, so tech might have the highest PE ratio, where Wall Street indicates PE ratio 50.2x for the American information technology sector. Okay, so that's 50 times greater than their earnings is what it's trading at. Now, obviously crypto doesn't have a PE ratio, but with assets, especially like XRP, where it has utility, right, that can somewhat be quantified, especially using models like QTM, we're saying that the intrinsic value is 5. So I'm using conservative estimates here when I say 1.5 multiplier, a 3 times multiplier, or a 5 times multiplier from $5. That's where I'm getting these estimates. And what I found fascinating is that in looking at the fib level, the 1.618 extension is essentially where the 5x multiplier is, coming from the intrinsic value of XRP. So it's kind of in line with that, like as in, the 5x multiplier would be really peak cycle of speculative demand for this asset. Now, more conservatively and more realistically, I would say somewhere between here, $7 to $15, $13. And then essentially that's pretty safe, is around $5, because if you think about it, just to get back to all-time high, that's $3.30. Okay, which, at that point, you're only $1.70 away from reaching $5. And as a percentage-wise, you're only 50%, a 50% move away, okay, at that point. Like, from down here, we're thinking, man, like, going up that much, that's a huge percentage move, right? Going up $1.70, because I was going up $1.70 from 40 cents, that's, hundreds of percent move, right? From 40% to 140, that's $1, and then you add 70 cents to that. But from up here, guys, once we get to all-time high, and we're moving past that to get to $5, it's a 50% move upward. Not unreasonable at all. I do not think in this cycle, guys, that we are going to get to all-time high and then just find that as a resistance and move back down. No way. I really do believe that we're going past previous all-time high. Definitely going to hit $5 in my opinion. Probably will hit 7.5, anywhere from $7.5, $7 to $15 in my opinion. Now, the $25 mark around there, that's going to be like best case scenario. But, with everything that XRP has, with everything that it's shown to be, especially considering that we've broken out of this 7-year triangle from my last video, this is a entirely new dynamic that we have not seen before. I don't believe, aside from everything that's happening mechanically within the markets when we break out of something like this, aside from the change in market sentiment due to Trump, Gensler, SEC, national stockpiles, BlackRock saying recently that crypto is a valid asset class in and of itself, aside from all of that, us having, especially now that it's confirmed, a weekly close outside of the 7-year triangle, guys, I really, like, my confidence level now, even if we come back down and test it, which is actually quite common, actually, by the way, when we come out of something like this, to come back down and test it. So we may come back down, hit $1, 4 or 5, maybe even a little bit lower. We may wick down below $1, but we're going to find support around this level that's above $1, even if that happens. If not, we're going up, but just keep that in mind, that we may test this and then shoot off again, okay? Very, very common to see happen. But yeah, guys, I'm about as excited as I've ever been for, not about as excited, I am as excited as I've ever been for XRP. And really, what we're going to see from here is just, anyone's guess, right? I think for sure we're going to see $5, new all-time highs, $5, and then from $7 to $15 is probably a reasonable estimate, and then 25 plus is going to be like best case scenario in my opinion. But yeah, I just wanted to get on here and talk about, valuing XRP from an actual, quantitative, very common, actually, and well accepted theory of supply and demand. And that's what we're doing. right? When you look at a price chart, what you're actually analyzing is price and demand, right? So when demand outweighs supply, we're going higher, and also it is in context with like things like hodling behavior or like liquid supply that's on the market. So if a lot of people are buying but hodling, the liquid supply is decreasing as well. So you can have demand come in, pushing up the price, and the fact that many people have already bought the token and are holding on to it is essentially decreasing liquid supply. So there's these different dynamics of like, I don't know if you've seen this before, but like price is on the y-axis, quantity is on the x-axis, and really everything I talked about is just shift in the supply and demand curves. And really, when you're looking at a price chart, that's what you're looking at. Okay, you're looking at shifts in supply and demand. That is the only thing that moves price. And for this little game, for example, it says, breaking news: local governments impose a tax on plastic straw producers. Consider the market for plastic straws. What happens? So in this case, well, I've already clicked demand, but in this case, supply would actually move to the left. Oh, it's allowing me. Yeah, so supply would decrease, and this decrease, so you can see price level 1 was here. This is the prior level. And then when the supply curve moved to the left, the green arrow going to the left, it essentially has, when it does that, I don't know if you can see this here or not, when it does that, it goes up, the intersection, the market equilibrium intersects at a higher level, so the price level after that is higher, okay? Breaking news: as more workers return to the office, they resume purchasing breakfast on their way to the office. Consider the market for breakfast sandwiches. What happens? So obviously demand is going up here, so same thing, demand goes up, price goes up. In this scenario, is when demand shifts to the right, price goes up. When demand shifts to the left, price goes down. It's all about the market equilibrium, where they intersect. Now, when you're looking at, I guess I don't have to show you this here. When you're looking at a price chart, that's all you're modeling, okay? So you're looking at supply and demand, because we have buyers and sellers, right? And that's all what's going on here is that there's buyers and sellers purchasing from each other, supply and demand, and that's what's increasing or lowering the price. So if we can value, especially something like XRP, if we can look at it from a supply and demand perspective and value it this way, it's a great tool in order to try to come up with, actual quantitative numbers like $5 in this next bull market as an intrinsic value. And most likely, we will trade at a multiple above that at some point. But with that said, guys, just wanted to jump in here and talk about that, give you guys some information, and I'll see you in the next video. Bye.